Thanks for joining us for the September survey results from the Purdue CME Group Ag Economy Barometer. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'll share with you the highlights from this month's survey. The Ag Economy Barometer dipped slightly this month to a reading of 121 from 124 a month ago. However, if you look at it a little more deeply and look at the index of current conditions and the index of future expectations, you can see that there was a pretty sharp drop in the index of current conditions. It fell to a reading of 100 from 122 a month earlier, while the index of future expectations actually rose a little bit from a reading of 125 to a reading of 131 in September. Farmers became less willing and less optimistic about making large investments in their farming operation in September. The reading on the Farm Capital Investment Index fell to 47 from 56 a month earlier, and sharply below its reading from July of 67. Farmers became a little less optimistic about farmland values on this survey. When asked to look 12 months ahead, the percentage of farmers expecting lower values increased slightly to a reading of 22%, and the percentage expecting higher farmland values a year ahead fell slightly to a reading of 11% from 12% a month earlier. When we asked the same question, but focused on 5 years ahead, we saw similar results. The percentage of farmers expecting higher farmland values fell slightly to a reading of 49 from 50% a month earlier, and the percentage of farmers expecting lower farmland values increased a little more to 11% from a reading of 8% a month earlier. Periodically, we ask farmers about their expectations for profitability and crop production. We've been doing that since the early days of our survey. When you compare the results this month to the results we had earlier this spring, there's a significant difference. In May, 41% of the farmers in our survey expected to see lower profitability in crop production over the next 12 months. In May, that fell to 34% expecting lower profitability. And in September, that fell again to 21% expecting lower profitability in crop production over the next year. We've been monitoring farmers' perspective on the trade dispute with China since last spring. And if you look at the last several months, there's been a change. The percentage of farmers that expect the trade dispute to be resolved soon has been increasing since July. In July, just 22% expected the dispute to be resolved quickly. That rose to 29% in August and rose again in September to 41%. We've also been asking farmers whether or not they think the trade dispute with China will ultimately be resolved in a way that's beneficial to U.S. agriculture. Over the life of the survey, going back to last spring, 72% have indicated they do expect a favorable result ultimately. And that was, again, the reading we got in September, 72% indicating they expect a favorable outcome to the trade dispute. At this time of year, a lot of farmers are negotiating or renegotiating their farmland leases with landlords. So we asked farmers about their leasing arrangements with landlords, and 73% of the farms that rent farmland indicated that they rent farmland on a fixed cash rent basis. 18% indicated that they rent on a share rent basis where the landlord receives a share of the crop. And just 9% have a flex rent arrangement where they have a base level of fixed cash rent supplemented by a flexible payment each year. That wraps up our survey results for the September Ag Economy Barometer. The next survey results will be released on Tuesday, November 5th. And we'll have a complete report available on our website at purdue.edu/agbarometer, as well as a new video. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.